Imagine for a second that the major banks, including the Federal Reserve, were secretly plotting to repurchase a large amount of XRP. Envision yourself waking up one day to discover that banks have allocated funds at a far greater rate than the current market price for XRP. Someone in a position of influence is supposedly having a private conversation regarding XRP potential role in the international monetary system. Would it be required for every bank in the world to use XRP if it were considered a strategic asset? Assuming that does occur, is it possible that they may attempt to buy it back in order to restrict supply? There are those in the cryptocurrency community that believe XRP true value is much higher than its current market price. Its significance for the future of finance may be demonstrated by a large buyback. However, why isn't this data being disseminated? How would the Federal Reserve's plan influence ordinary XRP owners, and what is it? We must ascertain the truth regarding this potential sale and whether financial institutions are preparing to seize control of a digital asset that is highly valued globally. Financial experts, Ripple insiders, and crypto enthusiasts have been proposing an XRP buyback for quite some time. The concept of a buyback is simple. Assuming XRP gains significant traction as a global financial asset, large institutions like governments and central banks will want to regulate its supply. No central authority is in charge of creating or controlling Bitcoin. With XRP, sending money internationally is quicker and more efficient thanks to its unique consensus log. Due to its impressive performance, XRP has generated speculation that it could serve as a temporary currency until the new monetary system is fully operational. So, why would financial institutions and the Federal Reserve wish to repurchase XRP? If XRP wants to be a significant component of the financial system, several analysts think that institutions would have to purchase a lot of it before it becomes popular. Increasing one's influence through a buyback is another option, redirecting ownership of XRP to financial institutions rather than individual investors. When a group or organization believes an asset is strategically significant or is undervalued, they can utilize it for financial market buybacks. The current price of XRP may be far below what banks estimate its value to be if this theory is correct. But why is XRP considered so important? What role does it actually play in banks' future? We should investigate its potential impact on global financial systems. XRP potential impact on the financial sector is being promoted as a game changer for international trade. Slow settling times and antiquated technologies characterize conventional banking systems. In contrast, XRP enables immediate cross-border money transfers for a nominal cost. This makes it an excellent tool for modernizing financial networks and is suitable for use by banks, money transfer services, and even central banks. Already, Ripple has integrated XRP into the systems of hundreds of global financial organizations, including large banks and payment providers. Because of its real-time liquidity, XRP has the potential to serve as a bridge currency across various national digital currencies. This would facilitate rapid and easy transfers across borders. This involves the role of the Federal Reserve and major banks. Banks will require a system capable of handling rapid transfers that does not rely on antiquated SWIFT networks if digital payments are to eventually become the standard globally. Institutional buyers in a potential comeback have been the subject of increasing speculation because this is an ideal application for XRP. Some believe that banks could buy up all the XRP in circulation at a fixed price if they wanted to control the entire supply. But if this were to really occur, what would it imply for frequent purchasers? Retail owners would have to liquidate there instead of benefiting from the skyrocketing price. Let's take a closer look at the potential effects of a buyback on XRP owners. For XRP holders, a return could mark a watershed moment. Early investors may be able to cash out at a substantial profit if a planned buyback by banks drives prices through the roof. Some have even proposed setting the buyback price so high that it exceeds the stock's existing market worth. Ooh. One XRPC can be worth several $100s or more. Governments and banks may be willing to pay a premium to manage XRP supply if they consider it a valuable instrument for their finances. On the other hand, a buyback might dilute the influence of tiny owners. Institutions may make it more difficult for ordinary individuals to own or trade if they truly desire complete control over it. This begs the crucial question: should XRP holders sell their tokens now or hold on to them for potential future price increases? Furthermore, would individual purchasers have any input into the specifics of a predetermined buyback price, or would the terms be determined by financial institutions? These are the unknowns that make the repurchase notion both exciting and dangerous. There is one thing that is certain. If banks and central banks genuinely do consider XRP as the foundation of the next financial system, they are going to do everything they can to stop it from moving. But before any of it can happen, the law is the most essential factor that will decide what will happen with XRP. Let's look at how clear legislation could either speed up or halt a future XRP buyback. Regulation has always been the largest challenge with XRP becoming extensively used, and it will continue to be a key concern in any buyback circumstance. The ongoing court case between Ripple and the U.S., the Securities and Exchange Commission, SEC, has made it unclear what kind of asset XRP is. As long as XRP is legally recognized as a digital asset that is not a security, it might be used by a lot of institutions. However, banks and other financial institutions may gain more clout if XRP is subject to stringent regulations that make it difficult for individual investors to purchase it. Before taking any major action with XRP, the Federal Reserve and other central banks will wait for official government sanction. Many believe that XRP will attract substantial investment once the SEC case concludes and new crypto regulations are established. For some, the only thing remaining until the announcement of a buyback is made is for authorities to provide clear guidelines. If financial institutions and governments view XRP as a vital component of the banking system, they may endeavor to acquire a substantial amount before its value skyrockets. Whether the regulations will benefit XRP holders or discourage small-scale buyers is the primary question. As a result of regulatory takeovers by banks and central banks, retail buyers may be left out of buyback deals involving XRP. However, if XRP remains publicly traded, its value could increase due to more usage. Whether XRP remains a decentralized asset or becomes completely integrated will depend on the decisions taken by regulators in the coming months.